All right, let's talk to some people here. All right. We've got Beyond Meat bag holders. Hello, old bag holders. Welcome. We'd love to hear from you. Federico, you can start. Hello, Federico. How long have you been? Yeah.
Sorry, yeah, hello. Hi,
Yes. Hello.
hello. No, I'm more interested in knowing why you think it's a failing business.
Oh well, the bonds were trading for 8 cents a few days ago. So the bondholders thought they would get 8 cents of their money back. The equity holders would get nothing.
Fair, yeah, I understand your point. Um, I don't know. I've been looking at this company. I've been vegetarian for 25 years, so for me, it's more like some sort of like a psychological attachment to this company rather than a spreadsheet kind of number thing. And seeing it thriving recently, it's
I wouldn't call it thriving. The revenues dropped 20% last quarter.
no. Yeah, I understand. Yeah, I understand. But thriving is in terms of like a stock price. You know, it went up like from 0.5 cents to
Well,
we're
that's
like $4 now.
that's because they staved off bankruptcy for another few quarters. But they'll be right back bankrupt in a few quarters, I think.
Do you think what like if I wanted you to think how can we save this company and make it better and make it like a I don't know but not thinking about like all those like healthy aspects of the food that they make. What can we do?
Well, I mean, most companies need profit to survive, and last quarter the revenue was 75 million, but the costs to make the products was 66 million. So they only had 9 million left in gross profit, and then they had to spend 42 million, on the actual business, which unfortunately resulted in a large negative income of 35 million in losses, which unfortunately they have $1 billion of debt, and they just renegotiated the debt, but they still have the debt. They just got a 3-year break, and those 3 years cost them 300 million more shares. So any shareholder now has the debt holders as their new partners, and the debt holders will keep doing this basically until the company's gone. So basically, the only way to save it is if a miracle happens and people start actually, eating their food. That would be a good first start if they started eating the food, because last year before had 93 in revenue, and this year is 75. That was Q2. I'm sure they'll be reporting Q3 soon. So their revenue dropped 20%, which is never good. So the revenue would have to start going up instead of down, I would say, to save the company.
Yeah, fair. Yeah, I understand. What do you think about the new like Walmart partnership? Could that like spark some more sales?
Maybe, but they've been, in 2022 they had 400 in revenue. In 2023 they had 350. In 2024 they had 320, and it looks like this year they'll be lucky to get 300. So keep in mind that they weren't profitable in any of those years. So even if Walmart got them another 100 million in revenue, which is unlikely, they still wouldn't be profitable. In fact, they weren't even gross margin profitable. And I have to tell you just how rare it is in business when you have negative gross margins. It's normal for companies to have negative profits, but negative gross profits means literally the thing you're selling costs you more money than you're selling it for, which is really kind of, really wild.
Yeah, no, I understand that point. I don't know. Yeah, as I said, like I'm not like I admire your work in terms of like being able to analyze companies this deep. I think there's loads of things have changed in the stock market in recent years, where there are people buying because of different reasons, where not looking at actual numbers, but more like, I don't know, like the kind of like power to the people, and I like the stock, that kind of thing.
Yeah.
So yeah, I'm particularly attached to Beyond Meat, and I'm looking at the after hour price is now like 4.30.
Yeah.
And I'm like, I could have sold, and I'm just like, I don't know. I'd rather go to zero with them than.
That's probably.
Hey, can I interrupt
That's
for a second?
probably what's gonna happen. Yeah. What's up, man?
Yeah, so Marian, I fuck with you, dog, and we got in yesterday at like $1 or $2, but I agree
Who's
with you.
we?
You're right. This company shit. It's not. So I hope
who's-
nobody.
Yeah.
This is stock market. I'm not trying
Who's-
to we made a play on it, but I do.
Who's
agree with
we?
you. Oh, the Colt baby. YouTube.com/the stock market.
Oh, you're one, but you're one guy, right?
I am just one person.
Okay, got it.
But there is a lot of. I do speak in third person like that. Yeah, I'm a
Okay.
little weird.
Okay. Cool.
But yeah, I agree with you. I do think it was all about risk to reward on that. But even then, my thing is all about
Risk to
making
reward
it
or what? What are you talking about?
It was at 80 cents. It was at
Okay.
$1. And more
I
shares
didn't.
traded.
I don't know. I don't care about your trade. I mean, what you're telling me about
Oh,
some?
I'm saying in general,
Oh,
I
you-
don't-
You're
I
telling
think
me
it's
about
a
some.
long-
You're telling me about some invest. You're telling me about an investment you made the other day. What does that have to do with what we're talking about now?
About beyond longs are dumb. I agree with you.
Okay, I didn't ask you, but I didn't really ask you, but okay, cool.
Okay. Well, I'm just saying. I agree. So thank you. I think
Yep.
you're putting out good info.
Thank you for that. All right, let's talk to Lumi. Lumi,
Hey, I've got a few questions.
sure.
It's kind of interesting, man. Back in the day, I was talking about on computers before they kicked off, and when they were about $3 for a credit.
Dude, what? Why do I care about what you used to do?
I know. But,
Who gives a fuck?
But you were like, let's short it, and I'm
Yeah,
like,
but
I wouldn't do that.
I'm
And
a
now
rich
you're
and
like,
famous
let's short it.
investor, and you're some random guy.
I know, right? A random guy. And then you're like, now short it now, which kind of makes sense. What do you think about Fannie and Freddie?
I don't know anything about it. But what, if you were going to ask me about Fannie and Freddie, why would you bring up quantum?
I don't know, I'm just trying to...
You have brain worms. This is the reason. You have worms in your brain. I would go to a doctor. Check it out. Many people have brains in their worms. They don't even know about it.
But no, seriously,
No, I'm
I
serious.
think that they could be... wasn't covered by any chance?
I missed most of what you said because your cell phone is probably from Radio Shack 1983.
It definitely is. Yes. No, but seriously, do you know anything about bullet swaps?
Bullet swaps? Why are you... Okay, who's next? Will?
Hey, can you hear me?
Yes.
Hey, how's it going?
Great. What's up?
Good. Hey, yeah, I had a quick question. This is not about Beyond Meat.
You're in a Beyond Meat space.
Yeah, I know.
What the fuck? You want 600 people to listen to your question that's not about Beyond Meat in the Beyond Meat space? What kind of asshole are you? Get the fuck off my stage. What a dickhead. What's up, X? Even though I'm not that much of a dickhead. What's up, X? I added you. Gotta throw something out there, pal. You're on stage. Cosmic Karma?
Can I say something else?
Well, let's let this Cosmic Karma guy try.
What's up, guys?
Hello.
Got in at 52 cents.
Well, hold on.
Just
I gotta
sold
stop you. I gotta stop you real quick. Why does where you got in matter? Does that make your decision? Does that change your decision? If you got in at 1 cent, does that make your decision different to buy or sell at 4?
Well, why? Feels like you almost like want to punish the community.
No, I just like making money from idiots. What community? There's no community. This is the stock market. Nobody cares about your feelings.
Okay, imagine tomorrow we're gonna wake up and it's gonna happen with Beyond Meat. What happened with GameStop? Like, what are you gonna do?
I would short more.
Okay, but why not joining the community? That's the point.
Because I don't like losing money.
But it's up. It's at $447.
How long do you think that's going to last?
Yeah, but
You think it's a good investment? The negative gross margins? That's a good thing?
I think it's good as long as there's a community behind it, helping the company, pushing the keep holding the stock. And
Did you ever check out AMC?
pump it up.
You ever check out the AMC community? It's a good community. Check it out.
Of course, yeah. But history doesn't have to repeat.
No, but there's plenty of communities you can join as stockholders. I mean, there's these community-based investors, and then there's guys that look at the financial statements. And I'm going to stick to being one of the financial statement guys. But
Okay, cool.
I appreciate it. Next time you try to give me advice on investing, fucking at least check your head first. Katie Kin, what's up?
Hi, I just wanted to bring this up to the room. I don't even think the right question to be asking is how big a community there are on longs. I think the point is to exploit a short squeeze. And if you're really doing that, you're playing options. You're not delusionally holding shares because you believe in Beyond Meat. It's not like the GME cult where.
But nobody's short
stock.
this stock.
I think it's pretty obvious that it's just okay. We see that retail's piling on this.
But who do you think is short the stock?
I don't know who's responsible for shorting or the cause of this, but didn't they file for bankruptcy, like help with their bankruptcy? So it sort of looked like there was a bottom and there was
Hold on,
a
just
good
before
environment for it.
I just want to understand this question first. So you're saying there's people short Beyond Meat?
Of course.
Okay.
Shorts.
How do you know there's a short position in Beyond Meat?
Which is, I don't know if it's the wrong terminology, but like when I see tweets, when I go on Reddit, it's like the flow. Like you look at the order book and you can see the positions.
How do you see the positions from the order book? I've been trading a long time. I don't think a sell order is a sell order. You don't know if it's a short order or not.
I'm just then why do some of the tweets say 67% is short?
Okay, so that's what
am I like misquoting that? Like
no, that's what I wanted you to get to. Okay, do you know what a convertible bond is?
No, I don't.
Okay, so a convertible bond is when a company borrows money, but that money that they're borrowing, instead of being paid back, it can be paid back with shares of the company at a certain price. So when companies issue convertible bonds, what typically happens is the bondholders will short the stock, and that's called convertible bond arbitrage. So the bondholders are short the stock, and they don't care what happens to the company's stock price, because if it goes bankrupt, they're the secured bondholders. If the stock goes up, that's actually great for them because they convert their converts, and then they dump the stock. So helping out, the stock going up would be helping out the shorts. The bondholders or the shorts, they're rooting for the stock to go. They're praying the stock would go up. They're not getting squeezed.
So what's the timeline of this? This would inevitably lead to a drop. It's just about that then. I
mean, I think that, there was always no float to the company at $1, right? The market cap was like 50 million. So it doesn't take much money to get the stock up. But as the stock goes up, the possibility of the worthless company being worth a lot, nothing's changed in their business. They didn't overnight become a good business. The reason the company was very close to bankruptcy, basically days away, the bondholders told the company, you have two options. We put you into bankruptcy because you're not going to be able to pay our interest, or you give us, remember they had like 60 million shares. So they had to give, I don't know if you read the press release, they had to give the bondholders 300 million more shares. So the bondholders are sitting here saying, bro, the stock's at 4. We just got $1 billion from these idiots. Why? And so they're dumping the stock as we speak to the people who are buying it, who are the Bagholders. Nobody's short. Nobody cares on the short side. It's too small of a company. It's much more about the bondholders are getting the greatest deal of all time, because what's funny about the bondholders is they didn't just swap their bonds for more stock. Oh no. They are getting those 300 million shares, plus they keep their bonds. They just got it pushed out 3 years to collect. So it's kind of an amazing, like, and yes, I'm being nice to the chick because she sounds cute. Yeah, so what? Who cares? Fuck the British guy. But in any event, the my chat room is upset at me for being nice.
Can you translate this into like
Nice to you.
what the lifespan of this mania is gonna look like?
Well, I wish I knew.
How much is controlled by the situation you're describing?
No, exactly. I mean, look, if I knew, timing is like the hardest thing in the world to figure out, because if I knew when the parabola would stop, I would, at the top, I would short every dollar I had, right? Like I just, nobody knows that. Naturally, that's why I shorted a very, very, very tiny amount at like 360. And now it's, I should add to it here. But regardless, there's no way to know. I mean, I think those 300 million shares, technically, they would have to be, I'm trying to figure out if they'd have to be registered for them to sell them. And, given this thing just happened, like how, I would think they're tradable, but they may not be. And getting those shares tradable is probably like the technical matter for the bondholders. I should look up who the bondholders were, but the bondholders are, these bonds were trading at 8 cents. Bonds trade like stocks too, but they only trade between 0 and 100, or they can trade above 100 cents on the dollar, but typically in that range. And a distressed company is trading at like 70 cents or 60 cents. These were trading at 8 cents. Nobody thought they would get a penny out of these bonds. And somehow, miraculously, Beyond Meat is now, the stock price is risen enough where all the shares that these guys have gotten, they're absolutely thrilled to dump them. And they still, what's crazy is they still have the debt. So the company gets to live for another 3 years, but they still have to pay this debt off. And there's no obvious way to do that, given like the business still sucks. And I love. Is
anyone coming up on stage here to argue that the business is great? That's why I came up here.
I don't think anybody is.
Everybody just wanting another GameStop moment, which
Right.
to them means the ability to exploit a short squeeze, whether or not you do it correctly or not, hold shares or do options, but that volatility is what everyone's actually excited about. And
Right.
we expect that to be short term anyways. So the title of this room, I'm just curious who would be up here to argue that, oh, longs are a great idea. This is a great company. It obviously is not. So
Right. I mean, I like to short stocks of shitty companies. I'm looking at the bondholder list. It's very interesting. It's almost all hedge funds, which is pretty funny. And so when they short the stock, they have secured their position. And so they've goaded the company, GOAD, they've forced the company, quite frankly, into giving them 300 million more shares. There were only 60 million shares before. So now they get to dump all those shares today, basically, to people who will hold the bag. And then the bag holders have to wait for like, okay, next quarter, is the business any better? And of course it won't be. This company has been in a decline for so many years that it's hard to imagine, all of a sudden people are going to love their product after years of nobody liking it. The revenue for the company has gone down every year that they've been in existence, which is, I mean, how cringe do you get? Oh, wait, I stand corrected. They did have, they peaked in revenue in 2021, and they've been...
Was it $178?
The market cap was crazy.
2021, and one of their executives bit someone's nose off in the garage of a football game.
I totally forgot that. I was also in jail. But the 2021 revenue was the peak, and it's dropped every year since. And I don't think that anybody expects it to change. And they've lost money every year they've existed. So maybe this is the time. Maybe they'll finally have a great new product or something. They just certainly can.
They went into Walmart. That was the news today. But I think the argument is, will they just completely go bankrupt and fail and just not cease to exist, or will it be up? Because if you're invested at the bottom, it gives you a false sense of just feeling more comfortable, or even not even a false sense. It's like logical to be like, all right, there's not much to lose here because it's so low.
Yeah, I mean, obviously, when a company has $1 billion of debt and no way to service the debt or pay it back, the equity gets wiped out, right? Like the stock, that's what bankruptcy is. No shareholders get $1. but they were able to kick that can down the road for 3 years. So we're just going to go through the same thing 3 years from now. But next quarter and the quarter after that, if the revenue doesn't turn around, we'll be back at 10 cents. If the revenue turns around, something might change. But AMC was like a very similar situation where they had a crushing amount of debt as well. And their community was like insanely, kind of strong. But it still didn't change anything. The business was bad. The business kept declining. And it's still, it's basically down 99% since AMC and since the peak. And I made a lot of money shorting AMC. And I think this will be the same thing because the fundamental business is broken. Like when you sell a hamburger for $4 at McDonald's, it costs like 50 cents to make the hamburger. Here, their hamburger is $4, but it costs $4.50 to even make it, which is crazy. I mean, that's a terrible, it's the worst business on planet Earth, basically. So they have to find a way to raise the price or lower the cost of their insane product, but like they'll just be back out of business soon. Now, in terms of squeezes and stuff like that, I shorted like 20 basis points of my portfolio. So like, I hope it goes up to like 5 or 10 or something. It'd be awesome because then I could short a lot and make a lot of money. Like AMC, a lot of short sellers, people don't understand. They like it when the stock goes up because they can put more money to work. And inevitably, this is a zero, just like AMC. But it'll just be a matter of time. And to your point, nobody knows when the show ends. I think usually like a quarter, like their Q3 results and their Q4 results, which will be around January, like those would be good signs that nothing's changed and shareholders would like give up and there'd be no momentum. Because usually for stocks, they're not like meme coins. Like you need, even meme coins, I'd argue, like you need some kind of news or something to look forward to. Otherwise, you're just like, oh, let me find the next stock that's going to go up 5x or 10x or whatever. And what do I care about Beyond Meat when I can jump on the next thing? Like people are selling Quantum to go buy Beyond Meat after they sold Open Door.
I was going to bring up Open. I was like, this will just be like Open.
Yeah.
The reason AMC and GameStop are not is those communities, that was back in the era where it was based off nostalgia. They try to push BlackBerry and Bed Bath & Beyond.
Yeah, I remember.
Those communities are communities, and there's no legitimate community in the squeezes we're talking about 2025. I guess they tried on X to form one for Open, but it's just not the same.
Yeah, exactly. You can see that like communities are best done for organic, real things. Like the people who try to force an AMC community, they were like, oh, movies and this and that. And it's like, bro, we buy stocks because we want them to go up. That's it. We're not here to make friends. We're not here to hold hands. Like we're just here to, figure out how to make money. And I think that there's a pretty simple answer here. If you're forming a community for a stock, like arguably that's like the best sell signal ever. Because it's like NVIDIA doesn't have a community. It's the biggest company in the world. It's the best stock ever. It's just big funds, mutual funds and hedge funds trying to make money for their underlying, holders, their investors. And like a community sounds like a coping mechanism for like
it is for
a bad investment. Yeah.
People feel nihilistic right now. So if you're a knowledgeable trader versus not knowledgeable trader, that puts you into one category or not for why you're holding something. But if you're here doing crypto, you're probably more knowledgeable than not, and you're just sort of just trying to make money as fast as you can in an environment that's constantly changing. And when you see the government shut down and you just like tune in too much to the news cycles, the tariffs, this or that, jobs are going down, white collar jobs, AI, you get into a mindset of, oh, the only way I'm going to get ahead is making irrational bets, larger risks. And that culture now, unfortunately, is the culture.
And it's gonna, it happened in 2000 when I was a teenager, and in 2000, at the bottom, everyone had sworn off the stock market. They're like, this thing is rigged. I'm not making any irrational bets anymore because I don't have any money anymore. And that kind of thing gets everyone despondent. But like in these, I wouldn't call it a squeeze, but in these like rapid rallies, like a buyer squeeze more than a short squeeze, the only person that wins is the company. Because the company's sitting there saying, oh, we get to dilute, we get to, like if I'm Beyond Meat, I would sell 100 million shares tonight and I'd have 400 million in cash. And I'd be like, wow, now I can forestall bankruptcy by 5 years instead of just 3 years. And like the companies love it. And the bondholders love it because they're like, oh, free money. This is great. But the stockholders are just like, musical chairs gambling. It's like we can all go do this on, I'm sure Stake and like Bust a Bit or like Crash on Stake. Like we could all just toss our money in a box and shake it around and pass it around as like that's basically the financial equivalent of this. And yeah, the guy who got in at 50 cents is feeling like he's a genius, but the person who bought it from me at 4.80 or whatever is going to sit there and feel like a retard if it's at $3 soon. And inevitably, everyone's going to feel like an idiot unless you get out. So I feel like, it's just a gamble, a lottery, a raffle, And if you think that you're winning in a raffle, then, it's really hard to sort of, it's, finance is probably not.
$4.40 right now. I'm not an expert trader, but I do options on Robinhood. And I took $50 yesterday and I 17x'd it. I can like post a picture of it. The way to do it is so you can minimize risk. Go in with low amount of money, make like tiered calls, and then close half the position and just keep rolling them. And you're not even incurring really a ton of risk. That's how I would do it. But I don't understand people who would be in this like particular trading. Like I like vegetarian meat. Give me the stock. That doesn't.
Yeah.
That's not what you're going to 2x at maybe 3x and then lose very soon. It's just.
I mean, I like
the point is to figure out how to trade in this environment because this technical event can become a more rare event, and that's exciting.
I do like your style, which is get in and get out and get your money and go. Which honestly, like I oftentimes will buy charts like this, and I hate saying that term because I don't really love looking at charts, but like when Circle IPO'd, I bought a bunch of Circle. I barely knew anything about the company, but I was like, this momentum is so strong. I was just going to buy it, and I was able to buy it and like get $20, $30 a share out of it and just get out. And like, if you can spot situations like that where you go with your gut feeling and you're like, oh, okay, it's like 80% chance I'm going to make some money. Like I saw that at the close. I started shorting and I saw it like rallying and I was like, oh, this thing's definitely going to go to 5. And, of course, after hours, it went up almost to 5. But like, do you want to make investments that way? I don't think so. Like, as long as you have your trigger finger on the sell button just as fast as you have the trigger finger on the buy button, I say there's nothing wrong with that. That's called trading. But in terms of like, let's see what happens this time next week or this time in a month, that is much more like, okay, once the euphoria is over, what the hell do I own? What's up, Amy? It's always good to see Amy.
Hey, Martin.
Hi, guys.
What's up?
Hey, Martin.
How's it going?
What do you think of a community that then moves on to like have a cult follower mentality of the stock? Because that's what's happened to the Tesla community. It started with like cool products and stuff, and then it became like money, stonks go up, type of stuff.
I mean, I don't really even understand what you're saying, but like Wall Street manages most of the money in the world, and Wall Street doesn't have any community or cult. It's just investors looking at stocks and deciding whether they like them or don't like them. I think retail can form these communities and cults, but those are lower end investors who don't know what they're doing and will soon lose all their money. And good retail investors just basically have their money in, 401ks and index funds and things like that. And the ones that try to beat Wall Street just get punished. And that's really it. Tesla is owned by some of the biggest, funds in the world. It's not a meme stock or a cult stock. It's just a stock. It has had remarkable growth. The biggest stockholders are firms that look at the stock and they decide that they like it. And, it's really not like some big puzzle. There's Fidelity.
So you wouldn't even take that. You wouldn't even consider that as a signal, like the fact that it has a cult mentality.
No, I mean your viewing of small portion of what's actually going on, right? Are you in Fidelity's?
Oh yeah, sure.
Yeah, so the thing that you're looking at is irrelevant. What's really relevant is does the guy at Fidelity has a $10 billion position in Tesla? He's basically underweight Tesla, and the T. Rowe Price investor is also kind of neutral weight So when will these mutual funds say, you know what, I actually want to be
Top
long,
news alert. U.S. stocks, Wall Street ends
and I
Max's
like
earnings lift the
Tesla?
Dow.
Because right now they're deeply, deeply underweight, and so they're basically bearish. And so when will those guys, those are the real players, not the guy with 1,000 shares, you know, but the guy with 20 million shares or 50 million shares, those are the investors that matter, I think. Now again, you know, retail in aggregate, you know, does matter a little bit, but it's really, you know, focusing in on that versus the fundamentals of the company, which is really, at the end of the day, like if Fidelity saw Tesla revenue start to grow and grow rapidly, I'm sure Fidelity would say, I got to buy the stock. But, you know, Tesla's had some weakness lately, and it kind of makes sense that they're like, you know, we don't need to rush into this right now. We have to see if like they'll start growing again, or whatever reason they're not fully invested. Fidelity, if they're bullish on a company, they can own 10% of the company. But they've decided on Tesla to own only 1% of the company, which is for them basically like being short. And, you know, whatever you see on Twitter is like, you know, don't mistake that for the real world, I'd say. Isabel wanted to say something.
Can you hear me?
Yeah.
Oh, hi. Sorry, I was in a bad service area when you said hi, so I wanted to say hi. But I also wanted to say, like, these communities form after these types of events, right? When people get bagged, they all come together to commiserate, and it's like trauma bonding. They're not right now. They're all just squeezing each other, so they're not a community. They're just trying to squeeze each other out, because this is not a short squeeze. There's 326 million new shares. Like the short interest is going to plummet to probably around 10%.
Well, the shorts are the converts. So the converts are thrilled.
The bondholders that just got 320. That's who they are. And new notes for 2030.
The new notes is hilarious to me, because like they basically kept almost all of their debt.
7%, and then they have a special shareholder meeting. I put it on your tweet. Like they're doing a shareholder meeting on the 19th, and they want to raise the authorized share from 550 million to 3 billion, and they want a reverse split.
Oh boy.
There's nothing good coming for this, and there's no lockup restriction on the 320 bondholders.
Oh, so that's what they've just dumped on everybody basically in the last.
I don't know.
I'm sure.
Because they got, like, you know, the bonds were trading at like
8 cents.
Yeah, like negligible, and so they got like 230 something shares for 1,000 of the debt that they owned. So, like, they might be letting this rally to sell it, because and then the max price was 97 cents, depending on when they bought it. There could be some in there that from as low as 30 cents. So they might just be they might be waiting and just capitalize on this. They could.
I think bond hedge funds, you know, they maybe sold everything at 2 or 3. Like these guys.
You think so?
Oh man, I mean, if I'm sitting at a bond hedge fund and I was sitting on 8 cents for my bond, let alone my.
Right, but you have a rally happening, right? I mean, there's so many ways for them to make money in this. Right?
Immediately sell my stock that I'd immediately sell my stock that I got for free.
Yeah.
And then possibly short more.
30, right?
Well,
they're probably selling premium. Like there's so many ways that they're making money off this. It's crazy.
I think the first thing is you just like if you bought the bonds for 8 cents, holy shit, you just made, you know, literally a 50x, right? Like a 30x.
Yeah, if they bought it, I'm not sure how many. I don't know how long they were holding.
Yeah.
If they did.
If you did the bond at 100 cents, I think you were okay because you rode the short from like $100 to zero, so you're pretty happy about that. And
Absolutely.
And then at the end, you get to pull this switcheroo that gives the company didn't want to file, but they had to address the bond, so they gave the bondholders, you know, 3-4x the shares outstanding, and they still have to pay the bondholders in 3 years.
Cover the short.
Yeah, I mean, but it's funny to me because like there's some guy sitting on his desk at Wall Street that's just like ho hum, like, you know, I got to put this company into bankruptcy. you know, okay, we found a deal to like really punish this company, and then the stock goes up 10x, and they're like, what the fuck, bro? Like how?
I don't know, but yeah, I don't know. They eliminated a big portion of their debt. So I mean, I think they've staved off bankruptcy for the time being. Like what happens here, I don't know. But I mean, they have their outstanding share count is like 397. They might have about 10 million shares for some warrants that were in the S3. So they have 550 million. So you're right. They should drop an offering. They should capitalize on this. And if they don't, they're stupid. They don't have any money. So they should absolutely capitalize on this.
Yeah, I mean, they did roll those bonds 3 years, so I don't know how many bonds are outstanding in 2027, but I think it's at least like 300 million. So they're not out of the woods yet on the debt. It's just a lot more manageable than the billion they had. But you know,
they freed up about 800 million, I believe, the bond exchange.
yeah, which is, you know, a good start, but you know, they are going to lose around 100 million cash flow most likely from here on out. I mean, I don't think their business is turning around. I mean, the sales estimates from Wall Street were continued declines into the, you know, only 200 million of revenue range, which, you know, would actually, their losses would increase, I would argue. But I think that's the fundamental thing to understand here, is that like negative gross margins is just a bad business. Like there's just nothing, you know, there's nothing here to be excited about other than price go up, which is, you know, as Katie was saying, it's like price go up is cool until it stops, and then price go down very fast.
Well, it's scary how you don't realize they're not. Right? You're just each other.
Yeah, that's, and you can kind of, yeah, you can kind of tell by the volume, because it's just like, oh, I bought it 350, I sold it 370, buy back at 410, sold it for 430. Like it's just, you dip your toe in to make some quick money.
Oh, I ran into, I looked at $1 calls for 1100% on that.
How'd you see that? That's crazy.
I just, when I felt like, they only 5 cents.
Huh.
So I think I just got it before all this in, but yeah, I took 100% left. Yeah, I left money on the table, but I think it so bad.
Yeah.
I'm not sorry for it, but
Nice trade. I shorted it at 360.
pretty insane.
I'm gonna short some right now just because the price is higher. But it's I would imagine.
Short all the way to $100.
Oh yeah, really?
Yeah, this is going to $100.
Is that your dream or premonition, or what would you call that? Estimate?
There are pumpers having people buy $40.
Let's
And
go.
their shareholders meeting November 19th. Like I know people who are asked sell all the calls. That's how you make it.
Yeah. I just shorted some. My average is 375 now. It's this had been a profitable short for me years ago. Like this is just such a fucking dog company that's like, it's so reliable to short it. Because again, negative gross. What's that?
How much are you shorting?
Dollars wise, I don't really talk about that kind of thing, but in terms of size of the portfolio, I think I'm at 1% now. So it would have to go literally 100x for me to be worried about it, which I don't. I don't think Beyond Meat is going to get the market cap of Salesforce anytime soon. In fact, like I'd be pretty happy because I could short even more.
I don't mean to cut you off, but it gets down from like.
It was at 10 cents and they were going to cancel the stock, right? They were just going to terminate the stock's listing. But for,
They were on the press.
Yeah, they reached an 11-hour deal where the bondholders are like, all right, we get to keep our debt, and you have to give us 300 million shares, but you still have to pay us back some of the debt. And they were like, okay, better than bankruptcy. And here we are. And we're going to have the same conversation in
100%.
2 years. And, you know, usually when something like, this is called a cram down, usually when a cram down happens, the stock drops because nobody likes saying, oh, I owned 1 million shares, that was 2% of the company. Now I own 1 million shares. That's 50 basis points of the company because now the bondholders all own all the stock. And guess what they're going to do? They're not equity holders. They're bondholders for a living. So they're going to sell all the stock and we'll be right back to the same market cap except 3x dilution. So pretty ugly. Pretty ugly.
They could double the float.
Yeah, typically, I mean, this is just it's a down 80, down 90% thing. And that's why the stock did drop, I think, when they announced this. Is this more the Walmart deal than it is anything else?
Is it more what?
The Walmart deal. When was the cram down?
So, like October 5th, the restriction came off October 15th, I believe, and then, but if you look at the deal, there are some warrants in there. I haven't seen them announce this yet, but it's equaling around 10 million shares more. But I haven't seen them announce the warrant yet. I haven't fully read every single page, so maybe I missed it, but I haven't seen that.
Yeah, I'm just trying to figure out if the stock went up because of the cram down, which would be crazy, or the stock went up because of this Walmart thing, which would be slightly less crazy, but still stupid.
Yeah, I think when it did drop, like, I think below $1 when they announced the debt deal.
Yeah, that's what I thought. I saw it on the, like, it
Yeah.
was almost like a bankruptcy deal. And then they had this expands distribution at Walmart, which is, I mean, they already have distribution at Walmart and they're still going bankrupt. So I don't know that expanding distribution at Walmart is going to help. And then remember, with a negative gross margin, what's the point of expanding your distribution? It's like you're better off almost not distributing the product.
You know how much they're expanding? Like, is that even consequential?
I doubt it. Yeah, I mean, if they could have done something to turn this, if they could have turned this business around by now, they would have. But it's a yeah.
Or Walmart.
Well, we'll see. Look, I mean, you see what the next.
Expanding to like 2,200 Walmarts, and I think they're also doing like a direct-to-consumer deal.
I think you just gotta you just gotta look at what will the quarterly earnings show, right? I mean, if the quarterly earnings get better, then they expanded it, effectively. If they don't, we'll return to bankruptcy. But I would point out that when they had 400 or 500 million in revenue, they still were losing money, and they still actually had negative gross margin. Yeah, I feel like you scale. I mean, the more product you sell, the more profitable it should be, right? Economies of scale, but it's really not clear what their story is there. Yeah, no, I'd be pretty excited if it went to 10. Let's do the math here. So they have no cash now, right? They actually have net debt. So if it went to 10, the market cap would be $4 billion. And if they sold, I don't know, 30 million shares, they would have 300 million in extra in cash, which they'd be burning. So let's say they go crazy, they sell 60 million shares for 600 million in cash. The net cash then would be, just doing the treasury method here, 64 cents a share. So that floor isn't very much. If they sold 200 million shares. You know, what a lot of people don't realize is that that increases the shares outstanding. So it doesn't exactly, you know, get you this great benefit. But if they did that, which would be, you know, shocking if they could even pull it off, but let's say they did it, the new floor is $3, which, or $2.80, which isn't counting for the fact that, you know, they would be losing that money every quarter, kind of like AMC or anything else. And then, you know, we'd be back to where we started, and I'd increase my short at 10, and, you know, we'd be back to like trading below cash where it was before. So I don't think that really concerns me too much, as long as the business doesn't improve. You know, if the business improves, then all bets are off. I would try to, at least. I mean, it all depends. Like, you have to feel out the stock a little bit. Like, it doesn't feel like it's going to go to 10, so I might increase my short a little bit, but I have room. I have like I said, a 1% position now, and my average price is, hold on. Where's my average price? $3.95. So it's basically this price now. I started at $3.60. And so just real quick, they Beyond Meat said that they were in 800 stores before. So getting to 2,400 is I don't think very useful. And then they previously said, it's so weird. They previously said in 2020 that they were going to go to 2,400 stores. So I'm not really sure. 2,400 Walmarts. So this is like news from 5 years ago. I just pasted it. Yeah, I mean, that's just finance 101, right? There's a trade-off. If you buy puts, you have to pay implied volatility, and you have to obviously get the timing right. When you short the stock, you don't have any of those concerns. Yeah. So that's the trade-off, you know. You got two choices. There's no arbitrage. There's no arbitrage between them. If one of them was better than the other, it would price the right way so that it wasn't better. Yeah. Yeah, all those trade-offs are kind of like in the price, I think. Yeah, I mean, generally, yeah, because, you know, the implied vol is usually just too expensive, and selling vol is kind of the better move most of the time. And just shorting the stock is great. I mean, you can keep shorting it until it sort of has a peak. Obviously, if it never peaks, you're in trouble, depending on how big you got in the position. But, you know, GameStop was kind of I wouldn't say a once in a lifetime, because it's happened before. But once every like 20, 30 years, you know, these things happen, and you could get into some really bad luck. But it's funny, because even Melvin was surviving the GameStop trade. They were going to raise more money and kind of you know, they would have been able to survive it. It's just they decided not to. So he had money from Citadel and Point72 to keep in the trade. And obviously the trade would have worked if he shorted more at, you know, even at $50, he could have saved his trade. Forget 100 or 200 or 400, where it sort of flamed out within minutes. So, you know, shorting is not, I don't think most people understand it. I mean, one of the other things you could do in a short is you can increase your short as it drops, you know, which is what I've been doing in quantum. Quantum stocks have dropped, you know, around 30%. And if you have a 10% position and it drops 30%, you have a 7% position now. So you can increase it again to 10%. And if it drops another 30%, you can kind of keep increasing it. Obviously, at some point, there's no more meat on the bones. But, you know, that's why people like me kind of get excited when the stock goes up on a short, because at some point it's going to stop going up. And whatever that point is, as it drops, especially if there's no business model, it's just a shitty business, I can just kind of ride the short down by pressing it more and more and more. So, you know, the onus now, Like I started at 360, so I have no I have no skin in this fight, you know, and I increased and now I'm at 390 as an average. So for me, it's kind of disappointing because like I would much rather it be at 6 or 7 than I can get a 5% position on. And then as it dropped, I can increase that position to stay at 5% because this business isn't getting any better. The onus then shifts from the short to the long. The long has to prove it's worth $4. And it's really hard to do with negative gross margins. And again, this Fugazi Walmart thing, they actually said this 5 years ago. So it's not really clear that, you know, they're actually expanding to anything, you know, because in 2020, they said the same thing, that they would expand to 5,000 Walmarts and Kroger's. In 2022, they said that. You can just ask ChatGPT, and ChatGPT will find you the old statements. So this new statement, I think they just throw this out there every time they they need the stock to go up. It's like, we're expanding our relationship with Walmart. Well, you know, you've been expanding it for 5 years now, and your revenue's done nothing but drop, and the gross margins are so awful. Anybody else want to chat before we... Yeah, I mean, a lot of people that are allocate to hedge funds, they basically, I mean, one, you don't have to charge that much. So instead of a 1 in 20 hedge fund fee, you can charge like 0 and 10. And so you don't have to, you know, charge a lot. But if you go to a big family office, you know, it's not their thing to go short a stock. They'd much rather say, okay, how much do you want? And I had around 200 million of interest from different families, you know, wealthy families. Some names you would even recognize. Some names Amy for sure would recognize. And they were like, yeah, that sounds like a really smart trade. And, you know, how do you want to set it up? We'll give you some money. Obviously, you're not going to do it for free, but we're not going to pay like a hedge fund. And that's it. You know, and there's many, Bill Ackman did this. Bill Ackman raised like, I want to say $4 billion for one single purpose fund. It was like, I forgot it was Target or Air Products or something. And so it is a little bit of a weird thing, a single purpose fund or a single purpose, you know, trade. But like if a hedge fund is like, this trade is so good that I'm setting up a hedge fund just to do this one trade, it's kind of like, all right, let me hear the pitch. And, you know, some people will do like, okay, I'll put 10 million in that, and then I'll do 100 million on the side without telling you. So people definitely do that out there, what you're saying. But I think there are people who are like, imagine some like Saudi sheikh or like some like super billionaire family like Michael Dell or something. It's like, bro, okay, I like what you're saying. I'll give you 100 million. If it works out, I'm happy, you're happy, and we'll keep doing business together. But if you fuck this up, you know, your name's mud with me now. So I feel like that's kind of the dynamic, but you're absolutely right that like, you know, you're talking about your perspective, which is like you trade maybe every day. So it's like, I don't need Martin for this. I'll do it myself. But put yourself in the perspective of some like 75-year-old matriarch who inherited $1 zillion from the Walmart, you know, family. Like she's not sitting there, you know, gonna babysit some trade, you know. She's just like, here's the money, dude, you know, charge me a small fee and that'll be that. So that's kind of how that works. Yeah, I mean, again, like I think people don't understand this sort of dynamic where you can short more as the price goes down. Speaking of which, the price of Beyond Meat seems to be going down. But you can add, you know, as you go down. So like you don't have 100% upside. I mean, just a simple illustration is if I short 1 million shares of INQ at 80 and it goes to 60, I'm up, you know, $20 million. But if I short another 1 million shares, so I'm short 2 million shares at 60 and it goes to 40, I'm up 40 million now. And if I short get 2 million more shares at 40 and it goes to 20, I'm up another 40 million. And if you add up the percentages, the IRR is very, very high. And the profits, you know, as a percentage of the original capital are actually up a lot because even though in this situation, I'm not increasing my capital exponentially because the price is dropping. So you can sort of do the math on a spreadsheet and see that you can make more than 100% on a short, so long as you increase it as it goes down. But there's certainly a truism that the most the stock can drop is 100%, but that's not really the way I think most people look at it. I think from an IRR perspective, you calendarize or annualize the gain. So like if you make 10% long or short in one day, the IRR is off the charts. Even in a month, that's like a 200% gain almost annualized. It's not 120% because of the compounding. So that's the concept of IRR. So I don't think that that's most like, I think most, when investors say that, it's almost always amateur investors. But there is this meta thinking about shorts that, people like Buffett and others have said, I don't short for a number of reasons. And Buffett's excuse was he feels like shorting is just a pain in the ass, where the people behind the stock that is sort of being pumped or whatever are going to try harder to keep it up than he has sort of the patience for. And shorting is not for everybody. I mean, I think it's like just not, well understood. And it's definitely not easy. And I think that the biggest mistake people make shorting, and I think this applies to professionals especially, is that they short good companies. And they short good companies with good management teams at bad prices, and they think the price is what matters the most. And I really think it's the quality of the company and the management team that matters the most. So like everyone who's short Tesla, I think is making a gigantic mistake, because it kind of fundamentally is a good company, and it's kind of fundamentally a great management team. The price may be wrong. Like the price is expensive, but like in 2 years, if Elon comes up with a lot of great new products and new stuff, like you feel like an idiot, because the one thing you can't predict when you model, a lot of you guys see me modeling spreadsheets and stuff, but you might look at it and say, well, he doesn't know what Elon's going to come up with in 2 years. And I don't. So it's really hard to model Tesla, because what if he comes out with a new car that none of us thought about, or robot or whatever, and all of a sudden it's a smash hit and it's like, oh yeah, now it's a $5 trillion company. Oops. You can do that kind of modeling with more boring companies. Like Beyond Meat has like, just looking at the model, like there's no chance for them to win. They need a miracle. And Tesla, they have a track record of miracles. So like to me, the shorts make huge mistakes when they short like realistically good companies or even okay companies. But shorting scams at the company, or shorting companies that have no possible way to succeed. Those are my kind of things I like to short, and those traditionally have been pretty safe. Like Quantum has been painful for sure. I lost millions of dollars shorting Quantum, but I made millions of dollars on my other trades. So for me, it's been still a positive year. And then now I'm finally starting to get paid on Quantum because it's coming down and people are realizing what I realized first. And I'd much rather realize it first than realize it late. And that leads me to being early sometimes in trades, and that's okay. I can hang out and wait for times like now where they're starting to go in my direction. So that's kind of the way I look at shorting. It's definitely a weird art that you kind of have to learn from others, and you learn a little bit yourself. And from the outside looking in, it's very weird, but it's really profitable because, as Amy knows, I mean, it's really not that hard to determine what companies are scams. Like if you look at Beyond Meat and you're like, oh yeah, this is attractive, like you're kind of an idiot, but if you look at, or Quantum or anything like that, but if you look at like Ford or General Motors or Costco or Walmart or something like that, and you think that's a short, then I think you're also kind of an idiot. So I think, sticking to like shorts that are just like really obvious, like trash companies that are never going anywhere, they don't have revenue, or they're lying about something, those are my favorite shorts. I do think shorts tend to go a little extra in that. Like a lot of the shorts you talk to, and Amy knows this better than anyone, like they're super cynical people. And I think that cynicism is often misplaced, where like they look at everything through this like negative lens. And I think if you do that, you will basically short great companies, because you don't know that they're great yet. And the market doesn't know that they're great yet. And Tesla looked awful years ago, and even the converts were trading at 80 cents. And Tesla was struggling, quite frankly. And Elon was like, I'll buy it out at 420. And everyone was like raising their eyebrow, like, what are you talking about, bro? How are you going to buy out the company? And then, obviously years later, maybe a decade later, we saw how great the company was. And the shorts kind of just dug in their heels. They're still mad about it somehow. So when you short a good company, I think that's when
Top
you kind
news
of...
alert. Trump threatens Hamas amid push towards next steps of Gaza truce.
I think when you short good companies, you end up paying the piper. And, even if you're temporarily right, it's a dangerous game. It's like picking up a nickel in front of a bulldozer. But when you short a real trash shit company that is a garbage can, you can kind of laugh at it as it goes up. Obviously, at some point, it stops being funny. For Quantum, for a while there, I was sweating and nervous, but eventually rationality prevailed. And in 2000, when Druckenmiller was shorting the dot-coms, he capitulated and he basically caused the top of it. But the funds I was at, between Kramer's fund and then the Tiger Cub I worked at, we were kind of pretty cool customers and just kept shorting it. But it doesn't mean that there wasn't occasional chair thrown, and occasional frustration. So it's a really tough game. But I think when you're in finance, you try to use any tool to your advantage. You might do distressed debt. You might do private equity. You might do shorting. You might do arbitrage. You might do computer trading. There's hundreds of different tricks and techniques you can master to make money. And sometimes there's markets where it's like the SPACs. SPACs were like this money printer for a little while because you basically had this free call option with the SPAC that you could get your money back if you didn't like the merger that was happening, or you got the shares if you saw that it was going to work out. So Millennium, the biggest hedge fund practically in the world, basically did every single SPAC deal. And you're sitting there saying weren't SPAC deals garbage? And it was no, if you sat down and listened to the story, actually SPACs were kind of this weird dynamic where it was a win-win. And then there's other things like that where these pipes in the quantum space, QUBT is this company that was a complete fraud basically, but the stock was at 24 and they were asking you to do a pipe at 18. And it's that sounds pretty good. I'll invest in that. And Citadel invested and Jane Street invested and all these guys invested and they sold the stock. They got it at 18 and they sold it at 22. And, they made a fortune. So even in situations like that, you can kind of make some money. Yeah, there's the SPACs. Sure. There's even different countries. Right now I'm looking at some Korean. Steve was here a second ago. Yeah, but I'm looking at some Korean stocks that, there's been a lot of movement in Korea on the AI kind of, bubble, if you will. I don't think it's exactly a bubble, but whatever. And Korea is often wildly mispriced, usually awfully cheap. Not always though. And so I guess my point is you should never, limit your toolbook, or toolkit. You should always be looking at how can I expand my toolkit to new companies, new geographies, new sectors, new whatever. And SK Hynix is a really, really good example where SK Hynix just makes the memory for NVIDIA's chip. And you might have missed the NVIDIA rally because, I don't know, you're living under a rock and you didn't hear about AI or you didn't use ChatGPT. But for everyone else, starting in, 2025, NVIDIA had already gone up a huge amount. And SK Hynix hadn't really, but SK Hynix just basically doubled in the last month or two. Because if you ask an AI engineer what's the most important part of an NVIDIA chip, it's actually the memory. And with one Google search or one ChatGPT question, you can ask, well, who makes the memory? And you would think it's Micron, but it's actually SK Hynix and Samsung. And the more you read about, you could read on semianalysis.com, you do a tiny bit of research as to how these chips work. And it's no, that the RAM is really the problem with these chips is you need more RAM. And, just buying SK Hynix is gone parabolic. And it's not as microcap, it's this huge company. And there's probably a whole bunch of other companies in Korea right now that are trading at 20 times earnings, and that earnings is about to quadruple. But again, you know, it's never easy. I mean, there's you know, you're looking for like just a slightly less hard trade, I think, and it's all hard. Like there's no free money, and I think a lot of people look at Beyond Meat or something, and they're like, oh, it's gone up a lot, it's going to keep going, right? And like Quantum, there was a guy on Twitter who bought IonQ at like 80, and he was like, I'm making a big bet. I know IonQ is going to keep going up, and like that was literally the exact top. And you know, I'm not laughing at him because I know how hard it is, you know, when you trade, because like I was like, I thought 40 would be the top for IonQ. I was pretty surprised when it was 80 and pretty frustrated and stressed because, you know, thank God I made a huge amount of money in these other trades like Immune, where I shorted that stock went down 80%, or Spruce, where I bought it and went up 8x. You know, I had a couple of nice trades to pad my balance sheet, but like, you know, Quantum like went up, doubled on me like 4 times more than I thought it would. I was okay to eat one double, but then another double, another double, another double. It's like that. It's not too many more doubles before you're bankrupt. And does even if you're making money and other stuff. So it stopped, it's come down, but there's nothing to say that this is just a temporary drop and they'll be back up to 100 soon. So nobody knows. That's the beauty of the stock market. And the humility, you can be very arrogant that it's a bad company, right? And Beyond Meat, like I would tell you, it's a horrible company. I will not be humble about that. But you have to be humble about the stock, right? The stock can go anywhere. The stock is just 4 letters on your screen. It can go to $1,000 a share. It doesn't matter. It can go to 1 penny a share, conversely, right? So, like, there's no rhyme or reason necessarily. Now, generally, you can assume the market will be somewhat efficient and somewhat rational, but you know, there is no legal restriction on this stock trading at $1 million a share. It can. Is it likely? No, of course not. Is it likely it even goes to 100? You saw what Amy said. Seems pretty unlikely. But is it impossible? Is it illegal? No, it could happen. And all it has to do is happen for 1 second to put you out of business. And remember, at that 1 second, somebody's also buying at 100 who's going to get hosed on the way down. And sometimes these stocks are widow makers up and down. The shorts get killed, the longs get killed. The only person that made any money are the brokers and the high frequency guys, and you know, maybe you know, some of the market makers and things like that. And you know, everyone else, you know, is a huge loser. The insiders made some money, of course, because they got stock for nothing, and they usually get very good timing on dumping their shares. So I don't know. I'm on a soapbox here, but I try to stick to the one thing I can control, which is what does the balance sheet say? What does the income statement say? And, you know, the common sense of this is, you know, this company's never made money. It doesn't look like they ever will. And the Walmart agreement, you know, a quick search would show that like they've actually made this agreement many, many times, and they've said that they're expanding many, many times. And all that's happened is their revenue is contracted, not expanded. So that's kind of that. Anyone? Yeah, go ahead.